Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show where we strive to tell you everything that you need to know, but nothing more, regarding factors and developments that are likely to affect your investment portfolio. Well, let's begin today on Monday, June 9th, the way we begin on every day, and that is to cover major news announcements around the globe regarding primarily economic developments, geopolitical developments, and or the trading action in stock markets around the world. Now, those of you that have been watching and listening to our show for the past few months realize that what we try to do in this show when we go over the news is we go over the factual news. We don't tell you some story. We don't talk about unimportant factors and developments. We don't talk about coincident or lagging economic indicators. That is, not really indicators, they're just statistics. Statistics that tell you only what happened in the past and that have no value or very, very little value, if any value whatsoever, regarding what's likely to happen in the future. Instead, we discuss only the factors and developments that our experience and research shows has tended to affect the future direction of the financial markets, whether it's stock prices, gold prices, commodity prices, whatever it may be regarding the financial market. So having said that, first, the way we like to start out this show every day is to go over what happened in stock markets around the globe. So here in the United States, again today, the Dow Jones Industrial Average, the Dow Jones Transportation Average, and the S&P 500 Index, all of the stock market indices made another all-time high today. I think that's about the 16th or 17th new all-time high for the S&P 500 this year. I'm not sure exactly what the number is, but the major indices in the United States have continued to make new highs. Meanwhile, the technology-laden NASDAQ Composite Index and the small-cap Russell 2000 Index also continued to move sharply higher today. Although the NASDAQ did not make a new high, both of those indices did continue to move sharply higher. Stock prices in India, as measured by India's Sensex Index, also made another all-time high today, and stocks in Brazil, is measured by the Brazil Bovespa Index, rebounded sharply for the second day in a row today on Monday, June 9th. Meanwhile, China's Shanghai Composite Index and Japan's Nikkei 225 Index were essentially unchanged today. Now, regarding important economic announcements today, there were not any major economic announcements out of the United States today. However, China reported this morning that exports for that country rose sharply last month. So that's a very positive development for China. Meanwhile, Japan reported that the economic expectations of Japanese households as well as Japanese businesses on average rose considerably last month. And that's an important economic development for Japan because generally speaking, or I should say historically at least, when the economic expectations of businesses and households improve, those entities tend to increase their spending and investments, and not investments in the financial markets, real investments such as investments in homes or in factory manufacturing equipment. They tend to increase their spending and investments when their economic expectations improve. So that's a very positive development for Japan. So those were the major news announcements today, the real news. And as I say, we don't get into the nonsense and the noise and factors that don't matter. So that's it. That's all that I have to say today regarding what occurred today, or statistics that were released today from around the world regarding the financial markets and economic developments. Now, as I told you, our viewers, last week, we've made some changes to our programming. Beginning this week, every Monday, I'm going to get a little bit deeper into recent economic developments in the United States and statistics that tend to have that tend to be good at indicating where the U.S. economy's likely headed. So we'll get into that in just a moment. Tomorrow night on Tuesday, beginning this week, I'll discuss similar type of statistics and developments for other major regions of the world, including Europe, Japan, China, India, and Brazil. Wednesday night, every week, beginning this week, is our stock night, where I talk about different stocks that my research indicates are poised for some substantial gains during the weeks and months ahead. So let's leave it at that. I'll tell you later this week what our Thursday and Friday night shows are about. So let's now begin reviewing recent economic developments in the United States. Well, let me begin by saying I'm sure many of you have read articles from so-called experts and have heard a lot of these so-called experts on financial broadcast TV shows for many months now, if not for the past couple of years, repeatedly saying how the U.S. dollar, the exchange value of the U.S. dollar is going to collapse. There's going to be hyperinflation in the United States. Gold prices are going to $2,500 an ounce, maybe $5,000 an ounce. The U.S. economy's going to go into a double-dip recession and maybe a depression. Stock prices are way overpriced and are going to fall sharply. Well, guess what? None of that's occurred, has it? None of that has occurred. And none of it is going to occur for at least during the next 18 months. And the reason I say 18 months, I don't have a crystal ball. I don't know what's going to happen 2, 3, 5, 10, 20 years from now. Don't have a clue in the world. But what I have been very good at over the past about 15 years now is forecasting what's likely to happen in different economies around the world for a period about 12 to 18 months into the future. And once again, it's not because I have some crystal ball, or it's not necessarily because I'm smarter than someone else. It's because I do a ton of research, and I've been doing this for a long time, and I developed an economic and stock market forecasting model many years ago, more than 25 years ago, in 1986 to be exact, and I did months and months of just research and testing, and there's no reason to get into the details of that, but I did a lot of research and a lot of testing, the correlations between different economic variables and the correlation between those variables and what tended to happen in the past regarding the U.S. economy and stock prices during ensuing months. And I found that I was able to come up with a set of leading economic indicators primarily that I gave different weights to, and I don't need to tell you once again all about my model, but I was able to derive a model, not a system. Anyone that says they have a system, you should probably stop listening to them the moment you read or hear that word. A system. A system, I'll tell you what a system is. A system is a code word for we're going to trick you into paying some money for something that you're going to find out it's not going to work very well. Anyway, that's another subject. But I developed this model based on a lot of leading economic indicators that I found tended to be very accurate at forecasting what later occurred in different economies around the world, as well as stock prices, up to about 18 months into the future. It tended to be very reliable. And initially I back-tested this model. This was in 1986. I back-tested to 1969. I guess 1969 because I was a toddler during the 60s, and but yet I remember the 60s, whereas I couldn't tell you anything about the 50s as far as actually having lived during the 50s, because I did not. But I didn't just back test this model and then assumed everything that would work. In fact, quite the contrary, I didn't know whether what I'd come up with was going to work or not. But I started to use that model during the following years, and not really until the mid-1990s did I even start having faith in the model. But once I saw for a period of about 7 years that, boy, this model worked, it was very reliable, I started using it more and more, and it has helped me tremendously in deciding when to get fully invested in stocks or bonds or commodities or other securities, and when to get completely out of any given asset class. So a lot of what I will discuss on Monday evenings and Tuesday evenings regarding on Mondays major economic factors and developments regarding the United States, and on Tuesdays regarding developments in Europe, Japan, China, India, and Brazil. You will find that usually the variables that I discuss are components of this model that I put together many, many years ago. They're the variables that I have found to be very reliable in giving some good indication where a given region of the world's economy and stock prices of companies that operate in those areas are likely headed over the ensuing 12 to 18 months. So having said all of that, we have some very positive economic developments going on here in the United States. And so let's just talk about a few of those in general terms. Manufacturing activity rose last month in the United States for the 12th consecutive month. For the 12th consecutive month. The manufacturing sector of the U.S. economy has continued to be a very, very important sector of the economy. Housing starts in the United States, that is the construction of new homes in the United States, rose during April, that's the latest month for which data is currently available, rose by 26% as compared to the same month a year ago. That's huge. That's a huge increase. Meanwhile, building permits that were signed to build new homes, signed by home builders. Home builders need to sign a building permit, get a permit to build a home before they can actually build that home. Those building permits rose for the third consecutive month during April, indicating that the construction of new homes is likely continued to rise last month and will probably continue to rise during June also. Let's see, bank loans. Bank loans by U.S. businesses and U.S. households rose, I have some notes here, I guess we're going to have to look at them, rose last month for the third consecutive month. Well, why is that a positive? Why is that a positive development? Well, here's why it's a positive development. If businesses and households are increasing their loans, they're not doing that because they expect to soon go bankrupt, because they expect things to slow down the economy. They do that because they're feeling more confident in regard to where the economy is likely headed. And once again, as I said regarding the household and business economic expectations out of Japan that I mentioned at the beginning of tonight's show, when the economic expectations of businesses and or households improve, usually, those entities go out and spend more money. And when more money is spent in the economy, well, other businesses increase their revenues. All this is very, very positive. Corporate profits have continued to rise for many quarters in a row now. And in light of the fact that productivity at U.S. businesses has also continued to rise, while labor costs, which represent the majority of expenses for most businesses, have risen only modestly, or have actually trended lower over the past few quarters, although those labor costs were up a bit last quarter. Well, if businesses are able to keep their labor costs intact, unless labor costs stay about the same or rise by a very small amount, but the revenues, well, even if the revenues don't go up necessarily, revenues would have to go up some, but if labor costs remain in check, stay the same or rise very modestly, well, that means companies' revenues or sales only have to go up also by a small amount for their profits to continue to rise. So I expect corporate profits to continue to rise throughout the remainder of at least this year's. That is in the aggregate. Of course, not every business is going to increase its profits. Meanwhile, the Federal Reserve has told us month after month now that they plan to keep at least short-term lending rates here in the United States at very low levels for probably the next couple of years. They don't give me any specifics, but if you read between the lines in their text, they've indicated that they're going to do everything that they can to keep lending rates at low levels. So that's a positive for stocks. So look at my notes one more time. I think that's it. Hopefully you're getting the idea here. I mean, the U.S. economy is improving, and these types of developments that I mentioned over the past few minutes suggest that the pace of economic growth here in the United States is going to increase during the second half of this year, and that stock prices will continue to move higher. Now, regarding the very short-term direction of stocks, even though we've been seeing these new highs in the major U.S. stock market indices, and numerous stocks rally sharply over the past few weeks, still we do have numerous short-term trading statistics that suggest that it's probably not the time to be just getting into stocks, to be buying stocks now, because we're likely going to see some type of temporary pullback here soon. I thought it was going to happen last week, but it hasn't happened yet. So that's all I have to say for today. Thank you for listening and watching, and I'll speak with you again tomorrow.